Mixed performance was seen on the Wednesday US cash market session in the benchmark stock indices, where we see losses on the S&P 500 and the Nasdaq 100, whereas the Dow Jones Industrial Average remains resilient, supported by various defensive names like healthcare stocks. Interestingly, in the after hours trading, i.e., in early Asia session today at between 4 a.m. Singapore time to 5 a.m. Singapore time, the Nasdaq 100 E-mini futures rallied up to 1.5% and the S&P 500 E-mini futures up by 0.4% thanks to Micron Technology, a key AI infrastructure semiconductor play, managed to rise by a stunning 15% in after hours trading due to the backdrop of a very strong rosy revenue guidance by their senior management. However, the Nasdaq 100 still remains below its 200-day, still remains below its 20-day moving average. Interestingly, the US dollar index continues its rally up by now close to 0.2% and is also trading near a 13-month high with the very strong resilient US dollar that continues to see further weakness in gold prices, where spot gold XAU/USD continues its downward spiral as expected, breaking below the US dollar 4,000 per ounce as we are speaking right now. Oil prices remains lackluster, breaking below its 200-day moving average, where the West Texas crude oil and Brent crude oil both are trading below a key psychological $75 per barrel, now back to pre-war levels due to more ships that are now being in transition to and fro between the Strait of Hormuz. Very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be the Thursday, the 25th of June 2026. So, as usual, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so here we go. Let's have a quick recap what has taken shape yesterday and in today's early Asia session. All right, so let me share my screen. All right, over here, good. So what we could see over here is the performance of the US stock market during a Wednesday cash market session. That means starting from 9 p.m. Singapore time all the way until 4 a.m. Thursday early this morning. So what we could see is a pronounced weakness in those mega cap technology stocks that brought down the SPX 500 down by negative 0.10%, and the Nasdaq 100 is down by negative 0.4% as we are speaking previously on the by the close of the US session over here. All right. So at this point in time, what interesting over here is that if you were to look at the, all right. So let me share with you the performance. All right. So what we could see is that we see a slew of red in various pockets of the mega cap technology stocks, especially within the technology slash software infrastructures. Microsoft dipped down negative 2.27%. So that was the drag in the underperformance of the Nasdaq 100 yesterday. And in today's Asia session, the Nasdaq 100 E-mini futures that is trading right now at 11:08 p.m. managed to stage a strong bounce up by 1.64%, and that also causes the E-mini futures on the S&P 500 to stage a bounce as well, but not that much, only at 0.5%. So why the Nasdaq 100 E-mini futures managed to stage a strong bounce is due to a positive feedback loop from a key AI infrastructure slash semiconductor player, which is Micron Technology. So yesterday reported, not yesterday, in fact, early Asia session today at 4:01 a.m. Singapore time, reported its financial year Q3 earnings result that smashed expectation, and also it its senior management also give a very rosy revenue forecast over here. So due to that, Micron managed to stage a stunning 15% rally. All right. So if you look at the share price of Micron, all right, so Micron share price managed to rose up to 15.84% and close at the after hours at 1,214, okay, 1214. So because of this strong 15% push up in Micron during the after hours, created a positive feedback loop on the Nasdaq 100, and that also causes a positive feedback loop into the Asia Pacific stock market with the acceptance of the Hang Seng index that continues to remain lackluster. So what we could see is a slew of green on the Nikkei 225 up by a whopping 3.87%. And also the reason why the Nikkei 225 is so strong is because the Japanese economy is pretty much dependent on oil, and a majority of the oil are being imported from the Middle East region. So with these more ships transiting out of the Strait of Hormuz and oil prices inching back down towards pre-war levels, that also created another layer of positive feedback loop into the Nikkei 225, which is up by almost 4% as we are speaking right now. The Hang Seng continues to remain an underperformer or an outlier, down by negative 1%. And we start to see a divergence between Hang Seng and the China A share market. So the China A share market continues to remain resilient today, where the CSI 300 is up by 0.8%. The narrower China A50 is up by 0.3%. So now there's a rotation play going on between Hang Seng and the China A shares, where we start to see a very clear underperformance of Hang Seng, where the China A shares remains resilient over here. And as we go down to the other Asia Pacific region, the Australia ASX 200 also underperformed, down by negative 0.4%, also on the backdrop of a weaker Aussie dollar as well. The Kospi managed to recover after that 10% fall that is being seen earlier on Monday, where the Kospi 200 and the the wider Kospi index rose by 5% each. Our defensive STI is now trading flat, almost unchanged over here. All right. So now back to the FX market. So if you look at the FX market, this is the 5-day rolling performance of against the dollar. So what we could see is a very clear dollar strength coming in the picture, and the dollar is the strongest against commodities related currency like the Aussie and the Kiwi, where we start to see a weakness in oil prices and other commodities market that causes the strong performance of the dollar against the Aussie and against the Kiwi, where the Kiwi is tracking very closely with the Aussie as well. So 5-day rolling performance where the dollar is the strongest against the Aussie, up by 1.8%, and against the Kiwi up by almost 2%. And if you look at the 1-day rolling performance, also very same performance being seen, where the dollar is the strongest against the Aussie, up by 0.10%, and against the Kiwi up by 0.2%. As we look at the technicals of the US dollar index, it continues to remain very strong. So yesterday it ended the US session up 0.2%, 101.59, and it's trading close to a 13-month high since the major bullish breakout from this former 1 year plus of complex major sideways range configuration that was previously in place since end of May last year, pardon me. So what we could see right now is a very strong structural uptrend in the US dollar index going forward in the next couple of weeks and even months, as we start to see the start of a brand new multi-month to multi-week bullish uptrend phase on the US dollar index since the bullish breakout of ex-post FOMC last week, breaking above 100.54. Right, so that's for the US dollar index over here. So over to the news flow pertaining to oil. So oil prices erase wartime gains and is now trading at almost the pre-war level before the onset of the US-Iran conflict or slash war. And the reason why oil prices is so weak since the start of this week is because of now there are more ships flowing through and through in the Strait of Hormuz over here. So basically there's some ramp up of these ships that are now trying to actually flow out as much as possible in the Strait of Hormuz, as both sides has now decided to kind of calm down following the progress of this interim US-Iran peace deal, as both sides are now trying to form a roadmap in these 60 days, hopefully to cement a finalized peace deal. But from a technical perspective right now, since the bearish breakdown of the 200-day moving average in West Texas oil, we got to respect this ongoing near-term weakness, which I'm going to share with you guys later on the intraday technical outlook on the WTI. So that pretty much sum up the first segment of the daily dose. So now let me move on to the second segment, where I will select various broad-based cross-asset classes to show you guys the current technical trend on the intraday basis and the key levels to watch. So before we do that, let me expand my screen over here. Okay, good. So now let me start with the FX market. So the FX market I want to start will be the Aussie dollar, given that the Aussie dollar is the weakest major currency against the greenback in the past 5 days and as well as in the last 24 hours. All right, so let me expand my screen. So initially, previously we expect a minor bounce, but the minor bounce didn't take shape and plummeted all the way, hitting our first support level at around the 68.90 level, and right now is trying to trade within a bearish pennant formation, hitting now very close to the key long-term 200-day moving average that is confluencing with a bunch of Fibo extension cluster level on the downside, 0.6863, 68.43, and this 68.43, if you look back in time, is also confluence with the swing low of 30th of March this year. All right, so if you look at the current situation in the trend of the Aussie dollar, it continues to be on a deceleration mode on the downside. So we got to respect this ongoing bearish trend over here. And in fact, if you will start to see the hourly RSI, so the hourly RSI also got rejected right exactly at a parallel descending trend line resistance drawn from 15th of June. So with that, I will now have a rather tightened short-term pivotal resistance level, which is confluencing with the 23.6 Fibo retracement of this ongoing minor downtrend phase from the high of 15th of June all the way down to the current intraday low of yesterday US session, pardon me, that is 23.6% Fibo retracement. So hence using 69.30. So 69.30, if you look back, you saw the former congestion area of 6th of April and 8th of April. So using 69.30, tighten short-term pivotal resistance on the Aussie dollar, maintain a bearish bias for a direct push down to potentially test the key 200-day moving average area, confluencing with 68.63, 68.43. Breaking below 68.43 may expose further weakness towards 68.14, followed by the psychological level of 0.68 in the first step. Only a bullish break up above 69.30 will invalidate this direct push down on the Aussie dollar, could kickstart a dead cat bounce slash mean reversion corrective rebound towards 69.60 slash 69.85 next, which is the that going forward will be the 50% Fibo retracement of this ongoing minor downtrend from the high of 15th of June all the way down to yesterday's US session low, and also confluencing with the former minor swing low of 11th of June, now turns into a pullback resistance level at 69.85. All right, so breaking above 69.30 will trigger off that dead cat bounce slash mean reversion rebound towards 69.60 slash 69.85. But if price action float down towards this level again, 69.85, I'll be on the lookout for a bearish reversal candlestick to flip the buyers back to the bears again, given that it's very clearly in a trading in a medium-term downtrend phase, where the 20-day and the 50-day moving average are both sloping downwards, and price action is still below the 20 and the 50-day moving average in terms of their positioning. All right, so that's for the FX market. Now, let me touch on the major stock indices, starting with the Japan 225. So the Japan 225 managed to stage a bullish reversal right exactly at the rising 20-day moving average and right exactly at the lower limit of this minor ascending channel support drawn from the low of 11th of June. So hence I will have a bullish bias for today on the Japan 225. So like I explained earlier why the Japan 225 is so strong. It also better, the Japanese economy also benefiting from lower oil prices, given that it's one of the key major oil importer. All right, so with lower oil prices, it reduced the risk of cost of inputs in Japanese corporation. So with that, I'll be using a rather tight short-term pivotal support level for today, given that it has already broken above this former minor range resistance at 69,770. Hence, I'll be using today's Asia session low, which is the congestion area of 18th of June and 19th of June previously at 70,700. Using 70,700, a rather tight short-term pivotal support, maintain a direct bullish bias view in this ongoing bullish momentum condition that's being seen on the Japan 225 that's representing the Nikkei 225. Next resistance level to watch will be the current all-time high area at 73,577, 74,025, surpassing above 74,025 may expose the next intermediate resistance, which is defined by a bunch of Fibo extension level and the upper limit of this ongoing minor ascending channel at 75,389, 75,407. Only breaking below 70,700 will negate this bullish direct bias move and kickstart a choppy minor corrective decline push now to retest 69,770. Only breaking below 69,770 will see a deeper minor corrective pullback to retest the former minor range support level, and as well as the 20-day moving average coming in at 68,735, 68,089. All right, so that's for the Japan 225. Now, an update on the major US stock indices. So let us start with the US Wall Street 30, the Dow Jones Industrial Average that managed to outperform yesterday against the S&P and the Nasdaq 100. So yesterday, we do have a bearish bias below this 51,975. Price action indeed pushed down, hit the first support level at 51,690 during the start of the US session before staging a rebound, breaking above that 51,990 level and retested the current all-time high area at 52,357, 52,410 before trading downwards. All right. So currently it seems to be have a very mixed performance on the US Wall Street 30. So for today, I will flip to a neutrality stance. So neutral between 52,357, 52,410. Lower limit will be 51,690. Only breaking below 51,690 may expose further intraday weakness to retest the 20-day moving average, which is also confluencing with the former gap up support that's been seen on 15th of June at 51,390, 51,235. All right, so that's for the Dow Jones Industrial Average, which is the US Wall Street 30 CFD index. Now, next up will be the SPX 500. So the SPX 500 managed to be kept below the pivotal resistance level at 7,465, 7,485, which is so confluence with the 20-day moving average. So previously on yesterday, we do have a bearish bias. So bearish bias hit exactly at our first support level before rebounding, which is at 7,374, which indeed these are key levels to watch for today. So hence, I'll be still paying very close attention to the pivotal resistance that we have earlier yesterday at this 7,465, 7,485 over here. So still maintain a bearish bias view within this kind of range configuration. First support level to watch will be yesterday's level that managed to survive at 7,374, which is right exactly at the 50-day moving average. Only breaking below 7,374 will trigger off further potential intraday weakness to test 7,333 in the first step. However, a squeeze up above 7,485 that would invalidate today's bearish bias view. That's also squeezing up above its 20-day moving average, and we see a choppy upward drift to test the next intermediate resistance level at 7,557. So that is also the rejection level on this Monday. All right, over here. So that's for the SPX 500. Lastly, will be the Nasdaq 100. So the Nasdaq 100 also managed to stage that bearish push down towards 29,170 at the during the close of the US session before rebounding very sharply in today's Asia session on the 4 a.m. Pardon me, at the 4 5 a.m. mark today, which is the release of the Micron rosy earnings guardians over here. So, but price action managed to store right exactly at the 20-day moving average, which is also our pivotal resistance that we have yesterday, 30,010, 30,100. So hence, I'll be watching very closely this level, 30,010, 30,100, with a downside trigger level at 29,620. Breaking below 29,620 will increase the odds of a drift down to retest yesterday's uh, swing low area at 29,170. Breaking below 29,170 may expose further near-term weakness towards 28,900 in the first step, which confirms with the 50-day moving average. However, if we start to see a price squeeze up above 30,100, that would invalidate today's bearish buyer's view to see a further push up to test the critical resistance zone, which is confluencing with the current all-time high area at 30,530, followed by 30,728, 30,795. All right, so that's for the Nasdaq 100. Next will be the commodities market. So let us start with Gold XAU/USD. So Gold XAU/USD continues to trade in this accelerated downward movement since the rejection on the 20-day moving average on 18th of June. So with that, price action continues to drift downwards, almost hitting below our 5th of November 2025 minor low at 3,934. So with that, my first resistance level to watch out for today in this ongoing bearish bias will be the minor swing high of 25th of June, which is yesterday's US session set high over here, which is 4,022. But I do not want to use 4,022 as my pivotal resistance. That will be very tight. So I'll be using right exactly at this 4,089 level. So 4,089 level also confluence with the upper limit of this minor descending channel drawn from the high of 18th of June. And if you do the Fibo retracement of this ongoing minor downtrend phase from 18th of June all the way down to yesterday US session low, that also confluence pretty much closely with the 23.6% Fibo retracements. Hence, maintaining our bearish bias view using an adjusted Titan pivotal resistance for Gold XAU/USD for today, 4,089 as it broke below the psychological level of 4,000, now trading at 3,974. First support level to watch 3,3934 in short. Breaking below 3934 may expose the next support level at 3886, which is the 28th of October 2025 swing low, and as well as the lower limit of this minor descending channel over here. However, if price action starts to do a bullish break up above 4,089, that would invalidate the direct bearish bias view to kickstart a mean reversion corrective rebound, aka dead cat bounce, to expose the next intermediate resistance level at 4,440, 4,220, 4,243 over here. So that's for Gold XAU/USD. Lastly will be the West Texas crude oil. So let's say the West Texas crude oil yesterday plummeted and have a daily close below the 200-day moving average, indicating further weakness ahead. So hence, I'll be using the close to the 200-day moving average in any bounce to flip to a bearish bias view for West Texas oil for today. 75.25 short-term pivotal resistance to cap any potential bounces. Two key support level to watch, to look out for today will be at 67.40, 66.10. That is the 2nd of March 2026 gap up during the onset of the US-Iran war at that point in time, and also the former pullback support of this major descending resistance that was taken out earlier, that was previously from 28th of September 2023 high. However, breaking below 66.10, that will see a further deceleration move on the downside towards the 17/26 of February 2026 minor congestion area at 63.80. Only a bullish break back up above 75.25 will indicate a bear trap yesterday and see a squeeze up towards 77.39, invalidating our bearish bias move for today, as well as further up will be at 79.23, 80.75 next over here, which is confluencing with last Wednesday minor swing high. Right, so that's for West Texas oil, flipping to a bearish bias for today using 75.25, which is also the 200-day moving average that got taken down yesterday as my short-term pivotal resistance level. So that sum up all the selected intraday technical outlook on this broad-based cross asset classes. So very quickly, before we go, let's have a quick look at the economic calendar. What are the key data to look out for today, 25th of June? So 25th of June, we have before the start of the London session at 2 p.m. Singapore time, we'll have Germany GfK consumer confidence data for July. So that could potentially influence the movement of the euro dollar, the euro crosses, and in some form the Germany 30 CFD index or the German DAX. Then heading into the US session, we have the very all important core PCE inflation data. So this core PCE inflation data will be a favorite inflation gauge of or inflation trend gauge for the US economy. So for the core PCE index, the year-on-year change over here. So for core PCE index, very quickly, yeah, over here. So the core PCE price index year-on-year change for May, market is expecting another rate hot figure to be at 3.4% year-on-year, above 3.3%. So if you look at the trend of the core PCE index, it's now rising very steeply at 3.3 for April. So that is way above the 2% target that the Fed desired. So you look at the 10-year trend, that is the highest level in almost in November 2023. All right, so that's close to about what, more than a 2.5-year high. So market is expecting it to come in at 3.4. All right, so if it starts to be much more rate hot than 3.4, let's say at 3.5 to 3.6, that could continue to see increased odds of a second interest rate hike coming into the first quarter of next year. So if you look at the CME Fed Watch tool very quickly, let me share with you what is the market expectation by the Fed Funds futures traders. So market expectation by the Fed Funds futures traders continues to price in the first interest rate hike to come in either September or October this year. Very high chance, 89% chance and 95% chance on the September and October meeting to bring the Fed Funds rate higher to 3.75% to 4%. And market going to price in also a quite a high chance of 63% to come in on the March 17 meeting. That means another second hike to bring it up higher to 4% to 4.25%. And these odds may increase if we start to see a higher than expected print on the core PCE price index year on year that go above 3.4%. And that could potentially further strengthening the US dollar and could also put some pressure on the major US stock indices, sucking up the AI optimism team play as well. So that will be at 8:30 p.m. Singapore time. And as we head down to the closing part of the US session today, at 3:40 a.m. Singapore time, we have a Federal Reserve official speaking, Fed Williams. So that could also potentially influence the US dollar as well. Right. So that pretty much sum up today's Daily Dose of Market Insights. I'm Kelvin here, wishing you guys a great day ahead, and we shall speak again tomorrow. Thank you.